Well, hello everyone, and welcome to Ancient Roman Trading Secrets with General Romulus. Hey, that's me right there, your old buddy Romulus. This show is sponsored by Backpack Trader. Our goal is to help you become the best version of the backpack trader you can possibly become. Well, Netflix, they finally caught a little bit of a break, didn't they? Started off with some bad movie reviews last year, earlier this year rather, first quarter, back in January. Gap down 22% on the earnings release. And then another big gap here in April, 35% this time. So most of the bad news was kind of cooked into this trailer over here. And well, I guess traders and investors thought it really can't get much worse than it already has. It may, over time, troubles could be mounting, but in the very short term, again, most of the bad news was cooked into this movie, and they released a little bit of a better result here than what some people were expecting. So stock is up 3%, but it's down from the 6% highs that it was posting immediately after the earnings announcement last night. Worse for Netflix, though, is that it doesn't look like the stock is putting in kind of a bottom. Again, just looks like a consolidation period over here. It may not get a 35% gap down again in the near term, but S&P 500 more likely falling at least to these lows over coming months, and that would mean that Netflix is going to get back to the lows that it's experienced lately, maybe even further below them. Another big tech-related company, although it's not a tech company, it's a car maker, but they are viewed by many as a technology company, Tesla. Their earnings are coming out after the close today, and they'll probably beat whatever estimates are out there. Stock may go up a bit. There's a pattern going on. Stocks are popping initially right away, either post-earnings at night or the next morning. Johnson & Johnson is a good example here. Just yesterday after the earnings came out, stock gapped up a lot in the open and then just faded the rest of the afternoon. And again, Netflix is showing that right now. Stock was up 6% right after the earnings release yesterday, last night. And now it is only up not even 3%. So there is a little bit of a pattern going on. Why is this happening? Well, we're still in a bear market. The bear market, no question, has taken a break. There has been a bit of a ceasefire as oil prices have come down a little bit. Let me try that one again. Here we go. As oil prices have come down a little bit, as interest rates have come down a little bit, and the war over in Ukraine, while absolutely just terrifying and terrible for all those involved over there, it's no longer making international headlines every 5 minutes with bombs dropping and wiping out entire towns, cities, and villages by the hour. There does seem to be some type of a trench type of development going on over there, which hopefully in the intermediate term may eventually lead to some peace. But for now, there is a ceasefire going on between the bears and the bulls. Stock markets are kind of still consolidating. Back in the bull market, post-COVID, and really from March of 2009 up until 7 months ago, we would say that, a stock would make a run, the market would make a run, and then would pause, take a break, go on a sideways move. And we would say that it's consolidating its gains. Now the market is consolidating its losses after being down anywhere from 20 to 35%, depending on the index and the country that you're looking at. There's been a little bit of a rally. Analysis demonstrates quite clearly, however, that this is nothing more than a bear market rally. Again, nothing more than a bear market rally. Could certainly go a bit higher. You see this gap on the S&P 500. Let me widen that a little bit and make that a little easier to see. See a couple of gaps right here. This was some brutal selling in the first week or so of June. Right up in here to the low side of that day on June 9th. That's a reasonable place to expect the market to rally if it does want to continue to the upside. After that, however, I would believe, and again, the analysis is demonstrating quite clearly that these lows will be at the very least revisited over coming months, let's say between now and the end of September, middle of October, somewhere in the next 3 months or so, and possibly even going quite sharply below them over time. Again, bear market rally, not the end of the bear market. So back to some individual companies. Again, Tesla coming out with earnings today. See stocks up 5-6 days in a row. People are kind of already betting and hoping and praying that great results are going to be forthcoming. And again, they might over the very near term. However, intermediate, longer term, Tesla has significant problems. They are plagued with the fact that over the last 3 years, they now make the second worst, lowest quality car out of the 32 cars that is reviewed by annually by Consumer Reports. So they're making crap cars. They're getting sued by every government agency. Competition coming from all sides. Yeah, Tesla's best days are far, far behind it. And if the stock does rally over the next couple of days, I would expect to see lower prices coming after that. So if you want to get a picture, by the way, of how difficult and challenging bear markets can be, a couple of weeks ago, maybe a little bit longer, there was some bullish action in the Chinese stock market that's represented by the ETF FXI. This contains a lot of the bigger Chinese companies, technology companies, and banks, power companies, utility companies, the bigger operations over there. This stock market peaked out long before the S&P 500. As a matter of fact, it was February of 2021. 2021 that this market peaked out. Right there, you see all-time high, February 17, 2021 at just under $55 a share. And then it just proceeds to get drubbed, okay? Really experience very difficult conditions. Here is what it looked like when the S&P 500 and the American stock market stopped going higher. We're still moving, by the way. So we have to go to January 4th right here, right there. That's when the S&P 500 peaked. Now look at that. Again, it was at $55. This one's at $35. Okay, down $19 a share. Significant reduction in price already in that period of time. And then it just keeps going. Okay, it keeps going. Now, it is possible, it is even probable that the Chinese stock market bottomed right here back in March, a couple of months ago. Right there at 26, a little over $26 a share. And then it comes up, kind of rallies a bit, consolidating the losses. But you see, then it gets above the 21-day moving average. Then it gets above the 50-day moving average. See what's happening here? Same conversation that people are talking about right now in the S&P 500, above the 21, then above the 50, and then go back to FXI. Okay, it stays above the 50 long enough for the 50-day average to even curve up. Doesn't matter though, okay? This thing is still just sitting here. Still just sitting here. Yes, it's off those lows, but that's it. That's all it can say for itself. It's been dead money. Dead money. Difficult, challenging. This is what bear markets look like. Now, ultimately, China may come back and revisit this area. But again, it looks probable that the Chinese stock market has bottomed ahead of the S&P 500. I don't believe the S&P 500 has bottomed yet. Again, best case scenario in the next 3 months or so is that it touches these lows, and worst case is that it goes quite a bit lower. We're talking in the 3,400 range, or perhaps somewhere in that neighborhood over the next 3 to 4 months. However, you still want to be very cautious with these markets. Again, a little bit of a positive note in here over the last couple of trading days could lead to further upside. Maybe the low side of that candle right there on June 9th, right there, the low side of that candle on June 9th. That kind of would be a reasonable expectation. Anything beyond that really would just be a gravy opportunity to sell any remaining positions and raise further cash situations. Yesterday, I brought up shorting Advanced Micro Devices, AMD. I also said quite clearly that the stock could easily go up for another couple of days. So I got a little short position on this one, around $85, right about in here just yesterday. And I'll be adding to that one a little more probably at the end of today. The news is out. Senate is passing that bill of the China Competition Act, or I don't even know what they call it, but it's subsidies, government subsidies to help chip companies that are based in America do more of their manufacturing here in the United States. And that is a typical situation, buy the rumor, sell the news kind of a deal. $50 billion is really just a drop in the bucket. I mean, I think Intel does $50 billion alone just in 2 months worth of business. Okay, so really it's not that much of a big help into the big, broad, giant universe of chip manufacturing across the board. Plus at $50 billion, we're talking government money. Takes quite a while for it to seep in and soak around through the system. So short term, these stocks are advancing based on that. And if you want to know more about that, just ask Nancy Pelosi's husband, who bought a bunch of call options on NVIDIA a few weeks ago before it was announced that the bill was looking to be promulgated and put through in the very near term. I mean, that guy is just an absolute menace. DUIs. And by the way, what he's doing, if it is looked at in the proper context, is no question illegal insider trading. No question about it. Illegal insider trading. The guy is a menace. He's an absolute menace. Unless he wants to share the money he makes with the rest of us, right? Just pro-rata out that to 330 million Americans. We'll each get about 5 cents. Okay, this has been your old buddy Romulus. Thrilled once again to share some quality trading and ancient Roman secret times with everybody. I'll be back again tomorrow. I hope you will be as well. Meantime, enjoy this smoking hot summer. I don't know why people are complaining. It's hot in the summer. Duh. That's all for now.